All right, gang. Good morning. Sorry, good afternoon by the time you're reading this, or listening, or watching. You know the jam. Happy Halloween. Hope you guys had a blast. Um, be safe out there, right? A lot of crazies. So let's jump into this so you can get back out there and enjoy the rest of your Halloween evening. I got four on watch here for you. Pretty simple watch list. So let's go ahead and jump right into it. And the first one that we're going to be looking at tomorrow is going to be FXI. Now, FXI, I mean, it's been on a good downtrend. You can see that. But lately, it's just kind of been consolidating here. A little bit of ups and downs, but ultimately, it's staying in this range pretty good and just kind of hanging out. So I want to kind of cover any potential run up by getting above the 200 day while leaving a lot of wiggle room to the downside, covering the most recent support down there. Okay, so simple strangle. This one is going to be actually leaning it long a little bit here. And looking into December now, I want to go ahead and sell those 35 puts and those 46 calls. Okay, as you can see, this leans it long with three contracts, about 9 deltas long. It's an 83 pop. Now, it's not quite a dollar, so I'm going to really want 34 cents minimum. Otherwise, you got to add another contract on there, which, for me, not a big deal. Okay. And with three contracts at $100 or four, yeah, three contracts, $100 at 34 cents, it's only going to cost about $1,200 to put on. So all in all, not too bad. Okay, and as you can see here, covers expected move by about $2 to $3 either direction. All right, now the next one that I'm looking at is going to be GDX, right? The gold miner ETF. Now this one too, gold has really just been, bouncing around. Again, same thing. It would reach a low and it'd run up, reach a low and run up. So I'm looking to cover quite a few distance away from that 200 day, as well as being down by the most recent daily support here. Okay. Now this one leans it short as well. So what I'm looking at here in December, a short skewed strangle with at least four contracts. I want to go ahead and sell the 27 put and the 37 call. Okay. Ideally, I want at least 25 cents, but mid price right now as of Friday was 29, so maybe we can get 30. But right around there, four contracts at 30 cents will lean you six deltas short. So that's perfect. We got an 88 pop, way, way high. So I love that. And going to cost about $1,200 to put on. Okay. And then as you can see, covers about $2 to $3 of the expected move beyond that. So good little play here. Next one is going to be UAL, right? This will be a long skewed strangle. Now, as you can see, airlines, almost all of them are identical to this pattern here. UAL, we really dipped down, and then through the last two cycles here, it's really just been sideways. You see we got yellow bars on the daily, we got yellow bars on the hourly, and yellow bars on the weekly. That pretty much just means consolidation going on. So I'm just going to go ahead and lean this one slightly long. Since we are in December, that's a long time. I feel like we're going to start seeing a trend back up. So with this one, December, selling those 39 puts and the 57.5 calls. Try to get at least 70 cents here with two contracts. That's an 82 pop, almost 8 deltas long, $140, less than $1,000 to put on. All right, and then again, $2 to $3 coverage of expected move. We actually lean it almost $7 on the upside, so really good play here. And then lastly, you guys, is going to be XLF. Now I know that XLF is near the all-time highs here, but they've been really rocking, and I like them long. But I don't really want to sell a put on them in case they come down. So what I'm actually looking at doing, let me correct this chart, is selling a covered call on this one. And then just, it is an ETF, so we do got dividends on it. So I like them long. If it continues to run up, great. It's going to do what I want it to do. If it falls down, we got to lower the cost basis a little bit. So what I'm looking at is into December, I want to go ahead and sell a covered call. Obviously, that just means buying 100 shares. And then I want to sell right at expected move, those 42 calls. Okay, it's going to be right around $39.80 to $40 as a debit, right? Slightly over 50% pop. But right now, if I were to buy it at $39.85, my max profit would be about $215 on just under 2 grand. Okay. Now, that's assuming we hold it till expiration and um, the calls get us, assigned and your shares taken away. You max profit $215. What I'll be looking for is I usually try to see when I'm trading right around $100 of profit, I usually take it off. Okay. Now, if for some reason XLF does dip down, no big deal. We just keep selling calls right at that expected move and collecting a dividend on these 100 shares, right? XLF's dividend is about 16 cents, so it's not huge, but if we have to hold it, you do get a dividend there a little bit on that one. All right. Now, I do get a couple of questions. They're asking me, why are you always doing strangles, James? Well, this market's been a little bit crazy lately. It's kind of double-sided a little bit, and when I can't find anything I like, a strangle is my go-to thing, because when you do a strangle, you are able to get farther out of the money on each side, so you give yourself a little bit more wiggle room while collecting a reasonable amount of credit. So you can lean them long, like I was doing here with GDX, right? I'm leaning this one short, okay, but still strangle. I'm leaning FXI long, but it's still a strangle. It just gives a little bit of wiggle room for like an uncertainty in the markets. I don't know, I don't want to sell a bunch of puts because we've been falling lately. I don't want to only sell calls, so I'll just sell a wide strangle in the direction that I think it might go, and if I don't have an assumption there, I'll just sell it neutral. So that's like my go-to play is a strangle. Okay, so that's why I'm always doing strangles, you guys. I'm sorry there's no defined on this one. They are a little bit smaller of a product, so it's a little bit harder to define. XLF would technically be the only one that is defined risk. So I apologize for that, but they are lower priced items, pretty easy to manage here. So that's it, gang. I just wanted to touch on why I mainly sell strangles lately. And as soon as earnings season's over, we can get back to some of the bigger named plays out there and go back to selling some vertical spreads, put spread, short plays, anything like that. But so that's where we're at, gang. Hey, have a great Halloween. Be safe out there. And hopefully one day I will see you guys in chat. Take care.